What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Tesla, NVDA, Apple, Google, and Microsoft. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where we plan on entering, where we plan on taking profits, and finally where we plan on placing our stop losses. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that last week we saw the strongest pullback we've seen in a while. SPY moved below its 10-day moving average and is now trading closer to its 20-day moving average, which is something that hasn't happened since the end of May. So what caused this to happen was the Federal Reserve's comments that they're still willing to raise interest rates if necessary, depending on economic data and development. So in terms of economic data and development, this week we are focused on the GDP report. We're going to get the final reading of Q1. This will be released on Thursday, June 29th. Now, on the previous reading, we did show that the economy grew at a rate of 3.8%, which questions the recession argument that the media is making. So looking back at our quarter-over-quarter GDP report, we can see that we have been growing for the last 3 quarters. We only dipped in Q1 and Q2 of 2022, which is technically what a recession is. A recession is back-to-back negative GDP quarters, and we did see that last year, which means we've already gone through our recession. The stock market already reacted to the recession, hence why we dropped all of 2022. And now that the economy is showing signs of life again, we are starting to reverse back up and the market is expecting growth again. Remember, markets are forward looking, so they already reacted to the recession ahead of its time, and it is likely right now we are back in full recovery mode. Now, last week's pullback was completely normal. Stocks do need to pull back and consolidate before they can take off again. So as stocks cool down over this next several weeks, make sure you pay attention to certain levels. And we're going to give you these levels here for this week ahead. SPY, first of all, has levels here at 432. So going into this week, your main support is going to be 432. If we move below 432, then we can move down towards 427 to 428, which means if you are shorting or you're playing puts on the market, then you're going to want to enter at the 432 confirmation break, and your stop loss should be just above that point. If you're longing the market and you want to take a bullish position, you can enter anywhere above 432, place a stop loss just below that point, or you can enter above 436.90 and place a stop loss just below that point. And your next target above 436.90 will be 439.50 to 440. This is going to be a significant pivot point. So if we break above that point, we can easily move towards 444 to 443. Now above 444, we can see a second price target of 448 to 450. If we move above this point, that means SPY would have regained this trend line. This is the trend line that we have been getting rejected at very strongly every time we've tested it throughout this entire year. Last week was the first time we broke above this trend line, which is this red line right here. However, we were not strong enough to continue the push, and it may need some more consolidation and cooling down before it can push higher. Now, last week on Friday, we did close below Thursday's lows, which is kind of a bad sign. So if you're coming into this week, there may be a little bit of uncertainty in the market, and that could largely be because of what's happening in Russia. If you're not familiar, I would look up the story. We're not going to get into it right now. Now, some other economic reports that we are focused on this week are going to be the retail inventories. Retailers in the United States have been struggling to sell off excess inventory. The latest reports have been showing a historical number of $770 billion of inventory just sitting there. So that means consumers aren't buying, and they're specifically not buying the items that they used to. So things like fridges, people are keeping them longer. Things like dishwashers, people are keeping them longer because their money has been spent on other necessities like food and groceries, and that's because of the inflation phenomena that we're seeing. So if you are trading stocks like Walmart, Target, Costco, then you may want to keep an eye on this report, and it also gives us an idea of what consumers are doing and spending their money on. Finally, last but not least, we have the PCE report, which showed an uptick last month. So we went from 4.2 to 4.4%. The PCE report measures inflation. In fact, it is the Federal Reserve's preferred inflation index. So the Federal Reserve have already said, which caused the market to pull back this week, that they are willing to raise rates again if inflation is lingering. And this week, we're getting their preferred inflation index. So on Friday, make sure you're paying attention to the PCE report because this will give us an idea of what inflation is doing. All right, so now let's move on to our watch list, and we're going to start with Microsoft on the daily candles, where we can see that Microsoft last week had a much weaker week than it has had in a while. It ended just above the 20-day moving average, which is a line that it has tested before. The last time that it came down here, however, it reversed back up and it was able to break into another 52-week high. But the fact that it's already back down here just a few days after that attempt and buying volume has kind of disappeared, you can see that on the day that it attempted that 52-week high, it pulled back, and it pulled back with very strong volume. So this means that Microsoft is likely ready to head down even further, and here are some levels that we're focused on. The first support we're focused on this week is 332. If Microsoft breaks below that point, then it doesn't really have much support until it reaches about 323 to 324, which is where it saw this reversal right here. See how this reversal is vertical? When a reversal is vertical and the support that is holding it is broken, then it can easily be filled back down. So this move could be a sharp one for Microsoft. Below 323.20, we have another price target at 320, and below that point, it can fill its gap down to 316. Now, 316 is a very ambitious downside price target, which means that it can take up to a couple weeks for this to happen. So if you are looking to trade Microsoft only for this week, focus on a less aggressive price target around 323 to 324. If you are bullish on Microsoft and you're looking for a breakout, you're going to need the stock to be back above 342, and you also need it to recover above the 10-day moving average. So if you're bearish, you're going to need it to open and close below the 20-day, and if you're bullish, you need it back above the 10-day. Or above 342, and above 342 it can rally towards 348 as the first price target, but the real breakout won't happen until Microsoft is able to break its recent 52-week highs, which are 352 to 225. Don't be fooled by the fact that the daily chart says 351.47. This is the importance of checking pre-market and post-market trading, where you can see in pre-market here Microsoft reached a high of 352.25, which is the resistance you needed above for it to continue this breakout rally. The next stock on our watch list is going to be Google. Now, Google has had a very uneventful few weeks. We have been trying to catch a breakout or some kind of move on Google, but it has just not given it to buyers. It has been moving completely sideways, but it has done a good job of maintaining the 120 support. Now, here are some levels to focus on for Google. First of all, it broke below the 120 support slightly last week and it moved to 118.83, but buyers were quickly to move it back above 120. But with that being said, 118.83 becomes our new strong support because we can see that there was a very strong reversal off of it and the stock pushed higher. Now, if Google moves below that level this week, then you can potentially take on a short or a put position and you can play it down to a price target of around 115 to 116. Below the 115.85, the next support is going to be around 113. If you are bullish on Google and you're looking to catch a breakout, you're going to need it to first break above 126. But above 126, the stock should not be held as a swing because it still hasn't seen the full breakout it needs. So above 126, it will be strictly a day trade up to a price target of around 128 to 129. But if Google can break and hold above 129.05, then the next price target is going to be 133, and we do have a lot more ambitious price targets for Google after it finally breaks above this range. Next stock on our watch list is going to be Apple. Now, Apple has been slightly moving higher, but it has been a very, very choppy couple weeks for it, and that's just because the stock is trading at such a overbought level or an overstretched level. Buyers are refusing to let go, and sellers are too scared to short it. Now, some levels to focus on for Apple are going to be first the 187.56 mark, which is a blue sky breakout. Now, what a blue sky breakout is, it's a breakout where there is no more resistances above that point, so we can't really say any price targets. We do expect Apple to push towards the 200 mark with the help of the overall market if markets overall stay healthy. However, its move up will likely be very choppy and it will have just a couple days where it rallies very strongly and it pushes to that 200 mark. But in the short term, the stock is going to be very choppy and it's going to make very unsettling trading conditions. If you are bullish on Apple, you obviously need this breakout, and the way you can gauge your price target is by watching volume. If there's volume on the breakout, then you can continue holding, but otherwise you're just going to have to gauge it by the overall momentum and see where you have to take profits. Now to the downside, if Apple breaks below the support of 182.60, then it can start falling towards 180. Below 180, it can see a very strong downside move. Apple is still trading above the 10 and 20-day moving averages. In fact, it's trading above all of its healthy moving averages. So institutions and traders, short-term traders, are holding the stock and they're looking for a higher move. The next stock on our watch list is going to be NVDA. Now, NVDA did make a new all-time high last week. Very impressive move towards 440, but the stock still couldn't hold. And that is likely because of what overall market conditions are like right now. So last week, the overall market pulled back. So overall stocks, even the strongest ones, needed to cool down. But you can see NVIDIA actually ended above its breakout point of 420, which is a good sign, and it's still above the 10 and 20-day moving averages. Some of the shorter term levels to focus on for NVIDIA are first going to be the 420 support. So if the stock moves below this level this week, then it can fall towards 413, and below that point, it can have a sharp sell-off towards 404 to 405. We also saw what happened with AMD last week. AMD saw a very sharp downside sell-off as soon as it broke below the 10 and 20-day moving averages. The stock lost more than 10%. So you can see that when we break below those levels and if markets continue selling off, other semiconductor stocks like NVIDIA can follow the lead of AMD and they can see a very strong downside move. Now, if you are bullish on NVIDIA, then it is very bullish above 420, but the ultimate breakout point is going to be 440. Above that point, it is a blue sky breakout, which means you have to judge it based off momentum and volume for you to take profits. Above 440, we personally do believe that NVIDIA can reach 500, so the next price target would be between 475 to 500. The next stock on our watch list, which is the final stock, is Tesla. Now, Tesla is back at its 10-day moving average. It closed just below it on Friday, but the stock is still holding a very high point since its rally, which means all the buyers that have been buying it are still holding it, and the stock is just going into what could be a multi-week consolidation before it rallies higher. Here are some levels to focus on for this week, and make sure you check back in next week because we will be updating you on these levels. Now, Tesla, if you're going to want to see a rally, you're going to need it to break above 279.54, which is the recent highs that it reached before it got rejected. So you can see that here in pre-market trading on 6/21/23, it got rejected at that level, which means that this is the strongest point in which we needed to break above for it to continue its rally towards 283 to 284, and above that resistance, the next price target would be between 289 to 290. Now to the downside, if Tesla breaks below its recent support of 252.50, it can see a downside price target of around 247, and below that point, it can see a downside price target of around 242. Tesla is on the hourly chart back at its 200-day moving average, which is usually where institutional buyers come in. So if there are buyers considering the stock, we are going to see that point being used as a support. But if you're watching the hourly and it moves below that point, then the stock can easily move towards that 230 mark, and it can be a good short or a put setup if you're trying to get into one. So I hope you guys found this video helpful. Don't forget to subscribe and like. Thank you so much.